Hello, welcome everybody to the Canis Major Video Deal blog. I'm Phil Grove, and we have a very special presentation this week. We're going to be talking about contract to close, and a member of the Canis Major team, one of our acquisition specialists, is on the line to give this presentation, Mohammad Hussain. Mohammad, are you there?
Yes, I am, Phil.
Well, I'm going to turn it over to you, buddy. Take it away.
Thank you so much. Thank you, Phil. Hello, everybody. My name is Mohammad Hussain, and I will be going to talk about the contract to close, as Phil mentioned. Before I begin, let me start with a little bit about my background. Again, my name is Mohammad Hussain, live in Dallas, Texas. From an education standpoint, I have a master's in engineering management and a BS in electrical engineering with my major in telecommunications. Prior to joining Phil and Genoa's team, I was running a consulting company in telecom and IT, and with a focus on smart city. I have done real estate investment in the past, starting in about 2010, focusing mostly on condos and single-family homes. In 2017 is when I joined Phil and Genoa Grove's group. And then I also started working with Canis Major Incubator the same year in 2017. So that was a quick background about myself. Let me go ahead and start with my presentation here to talk about contract to close. Now, before I do that, I'd like to remind you all that we had presented a three-part series that we covered whole from the deal evaluation process, and that includes how the deals are analyzed, how the visits are carried out to the site so that critical information can be carried on, collected, and that was done by John Leindecker. And then we also had modeling of the deal in a pro forma and getting the lead and the lead under contract itself, and that was done by David Teo. And then finally, Buddy Henderson actually went into a detailed process of due diligence. So what my presentation is going to be is really looking at, beyond that deal evaluation, is looking at what are some of the critical milestones we need to take to reach to the closing. So think of it as, so far we have brought the ball close to the end zone. With these steps, we can take it into the end zone, if you will. So some of the key milestones there are insurance, finding lender, title commitment and survey, entity setup or LLC formation, and of course syndication. And this is where we bring in the Canis Major investors as well. So I'm going to touch on each of those milestones in detail in my slides. So let's go ahead and do right now. And the first point is insurance. As most of you know, insurance is table stakes. It is important, and it's more so important because we need to make sure that it's not only adequately covers the property itself, but also it minimizes the risks to the investors. So some of the things that one needs to make sure that the insurance is taken care of is you have adequate property coverage. Loss of rental revenue is another key area that's very important. Flood insurance, specifically in the low-lying areas or flood areas. A good example in what happened in Houston last year with Hurricane Harvey. That's very important. So the other thing is, of course, having a general liability insurance as well. So things that might pop up that may cause a significant liability to you as the owner of that property. So having that liability insurance is very important. And more so, of course, that, these insurance is required by the lender, especially when you have investors in this and also the bankers in this, they will require that you keep that insurance. So the next what we're going to talk about is lending, right? So getting the needed funds so that you could actually fund the deal, right? Majority of that is going to be coming from a bank, from the lender, right? So what you want to do is work with the lenders so that the loans are structured in such a way that it gives you that maximum flexibility, right? So some of the things you need to pay attention are, the loan that you're going to get into, is that a short-term loan or a long-term loan? Whether it carries a fixed or a variable rate interest, right? Any penalties that you may incur if you prepay or pay in advance of your term, whether the loan itself is a recourse loan or non-recourse loan. So these things do have a direct impact to the bottom line as well, right? So especially on the interest rates. So it's very important to keep that in mind. The other thing is, of course, how the underwriter, right, the lender, underwrites these loans so that it is structured in congruence to the loan that you're getting from them. For example, a couple of things that you need to look for is the debt service coverage ratio for the property. What is the loan to value to cost ratio? Some of the things from our experience that we have noticed is, when you typically go to the bank for a loan, they're not obviously going to give you all 100% of what you ask. What we've seen is the range is typically between 65 to 85% of the loan amount, right? So where does that rest of the money comes from? That money is raised from the Canis Major investors. So our Canis Majors investors. And I'm going to get into a little bit more about how that is brought about so that you have an insight on what that process entails. But one other point I wanted to highlight here is the fact that some of the lenders, it may be a good idea to, depending on the property, that to bring the lender onto the property to show them, the value of the property itself. And that helps. What we found is that helps tremendously. The other part now I wanted to focus on is the appraisal. Now, we know that this, the lender requires an appraisal for the property, but what we want to make sure is that when they do the actual appraisal, that the property manager is notified so that they are given ample time to notify, the tenants. And typically when they do the appraisal, they want to go into, tenants' units, which are occupied already. And sometimes properties are, 95, 97% occupied. So it's very important that that notification is given so that there is no issues there. So the next thing really is, now having secured the loan, is to look at now working with the title company to getting close to a closing. But prior to doing that, some of the things that the title insurance does, or title company does, is issue a title commitment. And there are a number of things in there that can become quickly gotchas if you don't pay attention. So some of those are endorsements or objections or concerns that, that you may have on that title commitment. So need to work closely with the title company to resolve those issues before you sign that commitment. The other important thing within the title insurance is making sure both the seller and the buyer are following the timelines that are listed in the contract, because that is really the Bible, if you will, in terms of the timeline. So if for some reason we need to push, especially if we are the buyer and we need to push the closing, we want to make sure that that is taken care of ahead of time. So proper procedures are followed to move the closing beyond the date that's in the contract itself. A lot of times contracts allow the buyer to have that flexibility with certain stipulations to move that closing date if needed. Certainly reviewing the survey and making sure the title company is okay with it. The reason I state that is because a lot of times when you buy these properties, you do have existing surveys. So you want to be able to use those if possible. Both the lender and the title company are okay with it, then let's move forward with that. And then finally, you want to make sure, there are a lot of legal documents involved in this. So you want to make sure that your attorney reviews this. And some of that other areas where attorney can help is looking at, writing, depending on the needs, writing the deed or writing the note if there's a promissory note or what have you. So that's another area where the attorney can really help out. So having gone through this process, the next step really is going into the formation of the single asset LLC, right? So this step typically starts as soon as we get into contract. And why is a single asset LLC should be formed? Number one, lenders will require that. Two, you may have different pools, investor pools, right, in different entities, different properties that you own. So this will be a good differentiator as to which investor belongs into which LLC. And also, of course, it becomes a lot easier to send K-1s to all investors belong to this specific LLC itself. Obtaining a Fed EIN number once you form the LLC, and franchise ID numbers are given once the LLC is formed as well. One other thing on this is we want to make sure that what we found is to when you form the LLC, form it in the same state where the property is located. That's always a good idea, right? So again, this is real quick steps on showing you the formation of the LLC itself. Then the final step, of course, is the syndication, right? So what we have gone through are the steps of acquiring the insurance, acquiring the deals, the funds that are necessary through the lender and the title company. Now we come into syndications. Why do we go through the syndications? And that is, of course, to raise money. Recall if in the past few slides I had mentioned about raising the money, because the lenders do not give you the entire loan amount. So the rest of that down payment needs to be raised from somewhere. And what we do is we raise from our Canis Major investors. And also, it's a requirement to satisfy the SEC requirements, right? So what are those requirements? And I have listed those, starting with offering memorandum. This is really a set of documents that gives you a marketing prospectus about the property itself. It includes information such as, has some business plan, has pro forma, has projected return for the investors, right? Where the property is located, who the sponsor is, a little bit about the sponsor, and so on and so forth. The second important document in this is, and this is a legal document, is PPM, or Private Placement Memorandum. This is a legal document that covers the setup of the deal, of the property as well, and discusses risks, legal structure, distribution, the return on investments for the investors, etc. The operating agreement talks about the LLC itself, who it is owned by, how it is going to be operated, the investors that are in this LLC. All those will be listed as part of that operating agreement. Then, as part of subscriber questionnaire, it is filled out by the investors. That indicates whether two things. One is, of course, whether they're an accredited investor or sophisticated investor. There's a qualification criteria for that, depending on their net worth and so forth. And then there's a subscription agreement that tells you exactly the level of investment that each investor brings into this investment, into this deal. So that what the subscription agreement does. So with all these documents, then within the Canis Major investors can come into the deal, bring in the investments that's necessary so we can close the deal. Remember the 65 to 85% range that the bank gives. The rest of it is coming from our investors in the Canis Major. So having all of that done, just to kind of recap, we have obtained the necessary insurance that's needed for the deal. We have talked about the working with the lender, structuring the deal, bringing in proper loan to the deal. The third party is making sure, working with the title company for a clean title and a policy, and making sure that we can use any surveys that are existing, if not ordering new surveys. Obviously, again, that's required by the lender as well. And then finally, the fourth party is really forming that LLC and bringing bringing in those investors to be part of this LLC as well. The last part is what I mentioned before, and that is raising the funds that are needed from the investors. And in particular, these are the investors that we attract through our Canis Major program, right? Having done all of that, the last step here is going to the table and closing the deal, making that touchdown. So that's all I have for today. Phil, back to you.
All right, sorry about that. My mic was muted, so I wouldn't create any road noise. Well, thank you so much, Mohammed. That was a fantastic presentation. Each week we do a video blog on a strategy, a case study, or a step towards investing in commercial multifamily. If you'd like to get more information, please join the Canis Major Incubator. Get trained, become a sophisticated investor. Thank you all, and we'll see you on next week's video.